Today I'm going to be talking about the only high interest bank accounts you'll need for this year. So if that interests you, be sure to stay tuned. What's up, y'all? My name is Tomy Boboy, your credit and personal finance coach. If this is your first time on my channel, I'd just like to say welcome. Typically on this channel, I'm going to be talking about things related to credit and personal finance. So if you're interested in improving your credit and achieving financial freedom, then be sure you hit the subscribe button down below so you don't miss any of my future content. Anyways, let's go ahead and jump into the video. Now, while I typically don't recommend keeping large amounts of money in bank accounts, I do know that you do want to keep a certain percentage of your net worth or your income in a bank account, right? I typically recommend that you're pouring most of your money into your retirement accounts and the stock market, right? So you're keeping everything invested. That way your money is growing a lot faster. But another great option is using ultra high yield bank accounts. Now, the reason why I'm even talking about this is because I think that this is you at least doing the bare minimum, right? The reason why I say that is because there's a saying by Warren Buffett, a really great investor. He owns a company called Berkshire Hathaway. If you haven't heard of him before, definitely look him up and you'll kind of see what he's done during his lifetime. One thing that he's mentioned is if you don't find a way to make money while you sleep, then you're going to be working until you die. And basically what that means is you got to find a way to be able to generate income while you're sleeping, right? That way you can eventually achieve financial freedom and get into retirement, right? And that's kind of, he was talking more in the sense of the stock market, but I think even leveraging ultra high yield accounts is also a great way to do that as well. That way you're just making sure that you're taking advantage of any type of resources that you have. So right off the bat, we're going to go into our first bank account, and that's going to be from Digital Federal Credit Union, and they're actually giving 6.17% APY, guys. So that means if you're putting $100 in that account, then every year you're going to be bringing in a total of $6.17. This is probably one of the highest or pretty high that I've seen, right? This is going to be a great account for majority of you guys to leverage. But the one caveat that they have, of course, you know, like they can't just give out 6% like that because they got to have some sort of caveat. Because imagine if people start throwing in millions of dollars in those accounts, they have a caveat that you can only put $1,000 in that account. But before you start freaking out, well, the reason why I like this is because kind of what I've mentioned in my previous videos. I even did a video about how to invest for beginners. And in that video, I specifically mentioned that before you get into investing, you want to do two things, right? One was you want to get rid of any high interest debt that you have, like credit cards or payday loans, things like that. But number two is that you want to make sure that you have an emergency fund, right? Because you don't want to be in a situation where you start having to pull money out of when you're investing in the stock market, you have to pull money out of your portfolio. So this is a great account for you to have where you can keep that emergency fund, at least that first $1,000, right? So you can keep $1,000 in this account and be able to make that 6% off of that $1,000. And if you're ever in a situation where your car breaks down or you have unexpected expenses, you can pull the money out of this account, right? So that's why I recommend you get that and at least use it for the $1,000. Now, what you can do is if you want to get or put even more money into this account, you can open more than one account, right? You can open an account for yourself, maybe a spouse. You could open an account for a spouse as well and put the money in there. That's another option. But this fortunately is only going to be $1,000 or that's 6.17% for the first $1,000, and then it drops to 0.25%, right? So really it makes sense only for about the first 1,000, and then I have some other accounts that you're going to want to use besides that. Now, the second savings account that I recommend is actually the HMBradley account that gives you 3% on up to 100K, y'all. So you can put up to $100,000 in that account and still be able to qualify for up to 3% APY. Now, I will tell you, this actually comes with a few stipulations. You know, it's actually the APY or the percent that you're going to be getting every year, percent yield is actually going to be on sort of a sliding scale. And they base it off of how much of the money you're saving, right? So basically, if you want to qualify for the full 3% on that 100K, then you can only use, or you have to save at least 20% of the money you put into the account. So if you put in, let's say if you put in $10,000 into that account, then you would have to withdraw no more than $8,000 for you to qualify for that 3% APY. So that's one thing that you want to make sure you are not forgetting. Okay. And so it kind of goes on a tier process. It starts at the first tier, which is the 3%, and you have to save at least 20%. If you save 15%, it drops you down to a 2% APY. And then if you save at least 10%, then it drops you down to a 1% APY. And if you only save 5%, then you're down to half a percentage point APY. Okay, so the real benefit of this is you gotta put money in there and really not pull that money out, right? You gotta, especially the 20%, you want to make sure that you're keeping 20% in that account. But you have up to 100K and you're still getting that 3% interest. So definitely a great benefit there. Personally, I would use this as my main savings account. Again, the first savings account I mentioned is going to be used for more of an emergency fund. This is going to be the actual main savings account where you're able to store larger sums of money into it. And I'm actually going to talk about one more account that's going to be used more as like a daily type of card where you're still getting interest. Now, again, guys, I want to mention again, one key point to make sure y'all don't miss it is that you want to make sure that you're not just storing cash, right? I always recommend that more so you try to invest in retirement accounts and then you are investing remaining money into the stock market. So really the amount of cash that I'd recommend you keep is more towards the, making sure you have that emergency fund, $1,000, and then keeping 6 to 12 months worth of expenses. Okay. And then the rest, I would just invest in the stock market or any other things that you're interested in investing into. Right. But the reason why I say that is because, even though this is, you're getting 3% off of this, you got to keep in mind that 3% really isn't as much as you could be getting, right? So there's an opportunity cost there. So 3% is great for any, like if you're trying to keep that 6 to 12 months expenses. But I'm actually going to put up some information on the screen where you can see how the breakdown works for if you kept $50,000. Let's say you kept $50,000 in this account for 10 years and at that 3% interest rate, you would have around $67,000, okay, after about 10 years. Right? That sounds pretty good. You made about $17,000. But if you took that same $50,000 and you invested it in the stock market and got a return, let's say the return was about 9%, which is close to the average, about the average of what you would get in the stock market. At 9%, you would have almost more than doubled your money, right? You would have got double what you would have if you keep it in the actual bank account. You would end up with closer to 120,000. Okay, so that just kind of gives you an idea. This is more so I would use to save, your 6 to 12 months expenses. Again, that is probably the best route you want to take. And guys, if you're interested in investing in the stock market, but you don't know where to start, I shot a video. I'm going to link it. It should be either up above or I'm going to link it down in the description for you guys to check out. But that will show you how to get started in the stock market in a simple way, easy way for you to be able to jump in and where you're not taking as much risk as trading in individual stocks. So I'd show you the strategy that I've used and that I've seen a lot of high performers in the stock market use as well. So you want to check that out. Now, if this is making sense so far, be sure that you give me a thumbs up. That way I know that I'm at least heading in the right direction and I know you guys are enjoying the content so we can also get this video out to as many people as possible. Now, what I'm going to be breaking down is talking about one checking account that I would recommend you use as well that can give you a decent interest rate too. Now, this checking account is the Western Vista Credit Union, and it's actually giving a 3.25% APY. The reason why I'm talking about this, and maybe you're thinking, hey, Tommy, this is higher than the previous one. This one has a lot more stipulations on it. Not only is it only going to give you that 3.25% on a set amount, way less than the 100K, you're only going to be able to do 15K in this account. Okay. As well as you got to meet a lot of other requirements before you qualify for that percentage rate. There's really 3 things that you have to do. One, you're going to have to sign up for e-statements, which is easy. Most people have signed up for e-statements. So you're going to be receiving all your monthly statements online. 2, you're going to have to make at least 10 debit card transactions of $5 each. Okay. So that I think is probably the most difficult one of all of them. Really what you have to the easiest way to do this is if you have any type of subscription services like Netflix or Spotify, things like that, you can just switch it onto this card and that'll give you a couple, like 2, 3, however many. Some of you guys might give y'all 10, depending on how much of those different subscriptions you got. But right there should help you be able to reach that 10, that goal of 10 every month. And that's going to be really the hardest one. After that, what you have to do is you also have to set up a direct deposit. Okay. So all that really means is just connect direct deposit. So the money that you get from work is coming in every month. And it doesn't, depending on where you work, typically you're even able to split your direct deposit. So you might be able to just put a portion of your paycheck into that account automatically. And maybe you put the other portion in the other high interest savings account that we were mentioning earlier. So that can be an option for you as well. But really that's it, guys. Those are the top 3 bank accounts that I recommend you use. Right there, I just gave you a complete arsenal, right? Those are really, if you think about it, is really the only 3 accounts that you're gonna need, right? Especially if you're not only using this tactic that I just gave you with those 3 accounts, but you're also leveraging other investments like the stock market, then you're going to see that these accounts are going to be plenty for what you're trying to achieve. So this should be a good roadmap to getting you on the financial freedom journey. If you have any other questions, be sure you throw them down in the comments. Or if you see any new bank accounts that come up that you want me to review, and maybe so I can make an updated version of this video, throw it down in the comments down below as well. And if you enjoyed this video, be sure you hit the like button down below. And also make sure you hit that subscribe button. That way we can get this information out to as many people as possible. Okay. And that's going to be it for this video, guys. I'll see you at the next one.